Good afternoon, everyone. I can see the last session has definitely stolen a lot of energy. Uh, so, I'm Atul Khekre. I'm the co-founder of Finex, which is an open framework and platform for global trade and finance. It is built on top of Zinfin or Exchange Infinite. It is the hybrid blockchain platform designed for enterprise adoption. Previous to Zinfin, I actually set up one of the first production blockchain systems. I don't think many people actually know that development. It is a system that is, it's actually a platform for fraud prevention in trade and finance. This is live and in production. It is running in Asia right now. And it is, something that made us believe that blockchain is actually there, ready for production, and we could replicate the same process across global markets. So ever since the phenomenon of blockchain has hit the market, trade and finance globally is the kind of use case that everyone has tried to relate to it because it is a very complicated cross-border trust-based process, and there's so many moving parts. There's cross-border logistics, cross-border assets, there's settlements, and cross-border jurisdiction trust is not something that's clearly defined. Either you have law of this, this country or law of that country. And it is one of the most important markets because it is a fundamental, creation of economy. There's a buyer and a seller, there's a supply and a demand, and how you deficit the bridge between them is what creates the new economy around it. And these are not small markets by any chance. If you just look at trade finance, traditionally, this is about $30 trillion industry annually. This is the kind of value that flows around the systems. But it is also a market that connects to other systems. So, if you're looking for guarantees or asset derivation, which also goes heavily with this market, that's also a market that's worth trillions. To mitigate your counterparty risk, you need access to forex markets, which is like $5 trillion a day or something like that. Many institutions and governments they use this market for their procurements, and at the same time, it's highly constrained. There is, while it touches almost every part of the economy, it is highly regulated by the laws of a particular nation. It obviously needs cross-border trust. And it is something that has, there's a stringent check on the parties that are involved in it. So, some of you would agree that the kind of retail banking experience that we have all been having, that's something very superior, right? It has evolved in the last 10 years. If you look at how you send and receive money, how you access, how you manage your credit cards, or how how the lending kind of operates, or how an individual at a personal level is able to access banking, that has greatly evolved. The whole experience, user design, and the speed has evolved. But if it comes to business banking, wholesale banking, it has been still stuck for a while, right? It's still very paper-based. There is a lot of manual processes and delays, and it carries forward in the trade finance market as well, because there are so many moving parts in the system that things don't really move. You still had, I think it's just about now that the effort has started for digitizing bill of lading or letter of credit. So blockchain has got the FOMO finally to the regulators. We saw some of these platforms which were announced recently, actually maybe in the last 15 days. So E-Trade Connect was rolled out in Hong Kong by a consortium of banks and the port authority there. Singapore is working on something similar. There was this was just 3 days back, a shipping container consortium aiming the digitization of bill of lading. Banks have also joined the consortium. We have VTrade and TradeIX. ComGo is initiated by consensus. What these platforms are really doing is just getting banks to improve their processes around how they deal with business customers across borders, get to some form of agreement and saying, digitize the products. I would really question if this is blockchain yet. This is something, an overdue process that was required, but we can call it a blockchain as of now. So where do we stand? We are too small to matter, right? None of you had probably known about us before, and this is when you talk of trade finance, everyone kind of talks about the top of the pyramid, select financial institutions, the trade finance transactions that are done there. But this is not what we observed in the market. This market is actually growing horizontally in all directions. And there are a lot of disruptions in this market. Especially the market is actually more active at the bottom of the pyramid. There is more focus around SMEs. There are a lot more companies that have come out. One of the biggest disruptors in the market are fintechs. Fintechs, either they work off the open banking platforms of other banks, or they've acquired banking grade licenses for themselves. They can do almost anything that a bank does, and they have greatly enhanced the user and customer experience. So they compete. They can offer the same kind of lending and wallets or money transfer functions, but they're competing in terms of cost, efficiencies, and the whole customer experience. And we've seen many success stories around this segment. Revolut is one of the fastest growing fintech, and there's been Paytm, and they are also going in the wholesale banking market. So this space is actually wide open for disruption. Banks have started to fill the FOMO, so in spite of having the legacy, with them, banks have been either investing in fintech or setting up new entities that could speed up the innovation. The whole enterprise market is getting upgraded. So there are ERP systems now which talk in a very specific manner, and they've tried to make it more interoperable. Financials, asset managers, these are people who have this float with them to play in the market, to play more in the liquidity market, FX market, or the secondary debt markets. Settlement systems are a very important factor in this space, because if you look at really any kind of liquidity, most of it is still coming from the domestic settlement systems. And while there is still the lack of counterparty risk mitigation at a global level, who has the most access to settlement systems is actually the domestic settlement system that still pass through the centralized switching and are greatly governed by the central banks. And then there are, of course, the trade and finance consortiums, which have all gone up saying, hey, let's, we are a blockchain platform ourselves. We are a handful of institutions. So this has become a very three-dimensional growth sector. Everyone is doing a lot of things in this market, and everyone is trying to do their own blockchain. One of the most important factors in this game is going to be access to big data. It is going to fundamentally change the way companies manage data, because you could now just acquire users' data and verify it for KYC, ML. But there is, after GDPR, there's a whole new level of complexity into this. There's going to be it's going to be observed how you actually acquire that data, manage it, but you're still going to need it, right? The KYC, ML still has to be done. In terms of credits, till now, financial institutions have been dependent on a select few of those entities that have been maintaining the credit data, but there's a whole lot of big data around the credit itself, which is coming from fintechs, which is the new intelligence. You have new people, new companies, new enterprises, which are now onboarded onto the system, and there's a more updated credit data which is flowing from them. So that has to be utilized as well. There's something called intangible value, which is basically more research when the deal is done. Say, look at a syndicated loan transaction across many participants, and before entering into a deal, they want to do more research. So there could be something that affects the deal size or the deal financial during the life cycle itself, before the counterparty risk is mitigated. So, that encouraged us enough to go into this market, going to build actually a very interoperable kind of platform. So our first choice was naturally to think of just building an app or something, on an existing blockchain platform. But when we did a lot of back and forth and studies, we realized that we could not actually build on any platform because either some of them were too public or too private. That means the private blockchain platforms did not have the public trust layer, and the public platforms were way too public or decentralized for having the enterprise comfort to work with them. So we designed something that would have that would go well with that would have the least interference with the law and compliance systems. We designed this is something that we designed. It's a hybrid architecture. Many of you might have heard this term before. We are kind of pioneers in this because this is an architecture which can be more enterprise friendly. So it gives you a public layer, a public trust network, which is we built on the same virtual machine specifications of Ethereum, but it operates independent of Ethereum. So what we've added to that layer is instant block finality. It works on a different consensus. It is the delegated proof of stake. So there are existing set of validators who can approve the next delegators coming in. And we've added the KYC ML on the nodes itself. What it does, it becomes an effective trust network and an interoperable network because of the instant block finality. A private consortium network, all of you know, is it's a very important component. We've actually done some live deployments in this sector as well. This is when multiple private parties, which are not necessarily friends, these could be competitors. They want to share data with them and have smart contract-based rules built on top of them. Also, there are strict data hosting norms which are there for financial institutions where you should host your data. It should be really on premises or a very secure cloud. So that is not part of the law that we want to disrupt. And this is a very important component, the relay bridges. This is what gives this network a very hybrid kind of status, because now you have a public layer which gives you instant finality and public trust, and you can build the relay bridges across any other chains. It could be with the private network or with any other public network. So you can tune into other blockchain networks for liquidity, or you can tune into any kind of private network for basically cross jurisdiction or larger network trust. It can also be an effective conduit for liquidity because the private networks or the systems that are run by banks and financial institutions are very well connected to the liquidity, and you can actually relate that liquidity. So right now, the only liquidity that comes in the blockchain markets is actually come from exchanges. And while here in the US there are exchanges which are regulated, many exchanges around the world are not really regulated, and they're definitely finding it difficult. So what this lets you do is be an exchange yourself. You already have your KYC ML customers, and you already have regulated entities, fintech, who already have licenses. So these can actually relay liquidity with the public chain. So you don't actually need to have new exchanges which would in the process of aggressive expansion are going to overlook some of the key factors. You can just use the existing relay bridges. A very important factor in any network is how two parties communicate between each other. So, we want to have a protocol that speaks every language. So, for example, if I'm in Russia and if I speak good Russian, and if I am in France, I speak good French, I'd be friends with both of them, right? So I can be an effective conduit for them to transact. And this is one of the principles that we have followed in designing the protocol, which is the communication layer, which can be used by multiple parties. Working with them is to make it interoperable with not just existing legacy systems, but the blockchain-based platforms as well. One of the important decisions that we have taken while designing the protocol at the private network is to build it on the ISO 20022 standard. This is a standard of standards. I don't know, many of you know this, but this is what every financial institution is kind of has in their roadmap towards implementation in by the year 2021. That it can speak the language of your core banking systems, your ERP systems, or the SWIFT system, or different kind of data that comes across systems. And we have figured out a way using the protocol to take this, the way this operates currently with the centralized switching, to make it far more distributed. So you basically have the same hashing and blockchain functionality used over ISO 20022 to make it far more decentralized or distributed across participants in the private network as well. And one of the most important factors in blockchain space, like why is blockchain getting all the attention, right? It's because of liquidity. I think everyone will accept it, that it is liquidity that's what makes blockchain a real blockchain. Because other use cases are not really proven. It is the liquidity as a use case which is most proven here. So, the protocol is designed to be interoperable with fiat currencies or stable coins. These are some of the USDC, which is initiated by Circle and Coinbase, as well as Gemini USD, or True USD, which is these are well-regulated coins which are pegged back to US dollars. Then in the regulated markets like Japan, where Bitcoin and XRP are already accepted methods of payments. I think XRP is going to be from next year or something. So you can actually build effective relays with these networks as well. You can speak the same language with them. And it can purely work as a fintech solution between any two legacy systems. So we recently have done a deployment which will be announced somewhere by the end of this month. There was an insurance system, there was an ERP system, and there was a core banking system. And all of those were speaking different languages. They had tons and tons of reconciliation, manual processes, and intermediary-driven layers on top of it to do very simple things. So we give them a platform using our protocol for basically just put smart contracts onto these 3 different systems who are speaking different languages. So what is straight Finex? We are considering ourselves not competitors for anyone. We just want to be an open conduit, open connector for all of the platforms out there. It is based on open standards. That means any, not just trade finance platform, but any platform can connect to it. These are open set of APIs that you can actually use. We have made them, some of them live on our site right now, which will in the next slide we'll check it. But you can get started with some very basic features like just share common data standards, share decentralized credit data across different fintechs or banks, or share different KYC data. We have actually implementing zero knowledge proofs there as well. Some of the intangible data about more profiling around assets, projects. You can have your private network interactions with it. The way this will work is, imagine if an insurance provider in one region is insuring its customer for travel insurance, and while that customer is traveling outside, it has to, that system has to work with the external trust system. So that is when you can actually have the private network interactions done with these open APIs. The network, the underlying network, Zinfin, Exchange Infinite, has a digital asset attached to it. So this you can also do post-trade settlements there. I'll actually get to that in the next slide as well. And you can relay the liquidity across different platforms, because liquidity is one of the most important factors. Everyone wants to mitigate counterparty risk with more liquidity. So we are great believers, strong believers of the sandbox approach. We want something to be really tried and tested before we could hype it, or before it can be scaled up. That's why we have approached the regulators. We've gone across almost 8 or 9 regulators now. This number has to be updated actually. So we have received Reg Lab sandbox license from ADGM. This is a regulator based out of Abu Dhabi, UAE. And what we have there is you can actually connect to the local real-time gross settlement systems using our APIs, and you can do live test transactions. You can do post-trade settlements as well. So the digital asset of the network can be used to actually relay liquidity. You can do a cash in, cash out in the US dollars or other currencies as well. This is a GitHub URL. We are going to be adding more APIs over the next 2 or 3 months. There are some of them which are live already. Now, I think I heard some of the talk and sessions which happened before, and I think everyone is a believer, or everyone knows this for sure by now, that there has to be a standardization when you build platforms like this. So our approach is to and we already have a sandbox license. Let's get people to come there and interact with each other, request some form of standardization. So we could have a set of APIs. We can build them on the ISO standards. We can make them fairly distributed and decentralized. And those can then be accessed by a network of participants as opposed to any silo development. So while some of you may come to us for a specific functionality, we could develop the APIs for it and invite others to use the same one. So we'll get standardization out of the systems. One of the visions around our platforms is that it should be owned by real customers. The real incentives should be for real customers because they'll have real utility around it. Till now, liquidity in blockchain markets was driven by speculators. So, as the market has taken a hit, we don't know how they'll behave, the kind of unrealistic expectations that people have. And one sticky, the stickiness around liquidity can actually come from real customers only. That's the only way we see it. So we are inviting the fintechs, SMEs, banks, financial institutions, of course, foreign asset managers, regulators to come and join us. As I said or presented in the previous slide, we already have a sandbox license to do live transactions, and we have live APIs. We want enough of you to build standardization around it and gradually roll them out into production. We have approached several regulators around the world. What will help is once we prove ourselves in this jurisdiction, we can scale up pretty fast across other jurisdictions. We actually have a table right outside in the tea coffee area where you can meet for any consortium membership, or if you are looking for standardization, build it around regulators, we can give you the platform for it.